Hello everyone. Good morning, good afternoon, good evening, depending upon when you are watching this video lecture. Earlier, I have given you a task related to salaries, particularly covering the aspects of concept of arrears of salary, advance salary, HRA, gratuity, and pension. I hope you all checked your answers with the key that has been provided to you. If there are any doubts about solving these questions, you can always post them. But I would like to draw your attention particularly to this calculation of average salary, that is the average salary of 10 months before the month of retirement, preceding the month of retirement. So that calculation is very important. I hope you have done it correctly. If not, rectify it and practice it. That's a very crucial aspect where even 1 month here and there calculation mistake will affect the entire answer. So be very particular about it. And other aspects are more or less straightforward related to pension and all. Those are mostly straightforward questions. But once again, the question number 6 is a very important type of question. What we have to observe in question number 6 is the HRA exemption is dependent on many factors, and if any one of the factors changes, calculation changes. That is a point to be noted. Here, all the factors are not same throughout the year. They are changing in question number 6. Normally it was given basic, DA, HRA, rent paid, etc. That's okay. But from July onwards, there is an increment in the basic by 1000. Means there is one set of data that is applicable for the months of April, May and June, 3 months. Then for July onwards, there is a different set of data applicable. So naturally the entire calculations for the remaining months will be different. So July, August, September will have a different calculation. Why only September? Once again, because there is another change in the set of data where he has hired a new flat at Kolkata. Earlier he was in Pune, now in Kolkata. So one of the factors has definitely changed in that case, which means definitely there should be another type of calculation for the period starting from October, November, December. Once again, why only December? Because again from 1st January, the data is different because he purchased his own flat and resides there, which means there will not be any HRA exemption. Whatever HRA receives, that will be fully taxable. So like this, the HRA exemption itself is dependent on many of the factors that has to be observed here. That is why calculation has to be done separately. That is from April to June, there is one calculation. Once again, from July, August, September, there is another calculation. October, November, December, there is another calculation. Later on, there is no need of calculation because it is fully taxable. So that's a very crucial and important type of question which can be expected in the exams also. I hope you would have done it correctly. If not, also practice it now. Understand the factors that will have impact on the HRA exemption. First of all, HRA exemption will be depending upon various factors. What are those factors? First of all, what is the definition of salary? In that particular case, if a salary has changed, automatically the HRA exemption also will change because HRA exemption is dependent on the factors, including one of them, because we need to calculate 40% of salary or 50% of salary, rent paid minus 10% of salary. So when there is a change in salary, there will be a change in HRA exemption. And definitely rent that is paid, that is also another important factor definitely in the HRA exemption. Of course, actual HRA received, whatever actually received, if there is any change in that, then also there will be a change in HRA exemption. That will be anyway there. And not only that, the city in which the house is situated also will play an important role in the HRA exemption. So all these factors will have an impact. How much rent is paid by the SSA actually, how much HRA is received by the SSA actually, how much salary he has earned during that period, which city he is staying. These all factors will have impact on the HRA exemption. So whenever there is a change in any of these factors, then automatically we have to calculate HRA with the changed set of data for that period. So this problem has to be done by dividing the entire previous year into 4 quarters, because incidentally it was exactly each quarter there was a change. Not necessarily. These changes can happen at any point of time. So that's a very important question. Hopefully everybody followed the main concept there of change in the facts will result in change in HRA exemption. That has to be observed very carefully in question number 6. Question number 7 and all are 8, 7 and 8 both are straightforward, education allowance exemption. But what can be understood from here, what can be, one way we can say, learned from here, question number 7 and 8 is, it doesn't matter whether the expenditure is actually incurred or not, because these are all exemptions falling in the category of section 1014(2), wherein exemptions do not have any relation with actual expenditure. So whether the children are studying, whether they are going to hostel or not, that has nothing to do with exemption. Exemption will be available as prescribed by law. That's it. And as prescribed by law, how much? For education allowance, 100 rupees per month per child. For hostel allowance, 300 rupees per month per child, up to a maximum of 2 children. That's it. So whether they are going to school or not, whether they are going to hostel or not is irrelevant. That can be observed from question number 7 and 8. 9 and 10 are almost exam type of questions only, wherein in question number 9 it was clear whether dearness allowance is forming part of salary or not, because 50% of that is considered as part of retirement benefits. That is given clearly, and all the others also details are very clearly given. So hopefully the answer most of you got should be correct for question number 9. There is no ambiguity much in question number 9. And you have to observe any variety names of allowances, whatever we see, assistant allowance, etc., whatever the allowances names are all, those are all to be just understood. What is the nature of them? Are they falling in the category of allowances received for performing official duties? If so, if there is any actual expenditure, to that extent they will be exempt. If there is no actual expenditure, then you might have to take an assumption of whether that expenditure has been spent or not. But here it is given that assistant allowance is given, and that is actually paid to assistant 2000 per month. So here assistant, we are talking about office assistant. That's what we have to understand, not servant or somebody. So like that, this is like personal assistant allowance. Same with professional development allowance related to education or training or research of an employee also is okay if it is fully spent. So that is also a straightforward thing. So more or less the points in question number 9 are straightforward. There is no much of ambiguity in many of them. But in question number 10, there is an ambiguity. Definitely, yes, I understand. Because dearness allowance is there, dearness pay is there, given 3000 and 1000 per month, that is all okay. But the question mark is whether they form part of salary or not. Answer is, that is your choice, your assumption. If you assume that they are forming part of salary, there is no difference between dearness allowance and dearness pay. Just names different, that's all. So there is nothing called dearness pay separately. It is given separately, but both are same. But however, when we include them as part of the salary, when we consider it as forming part of salary, then we will include it for the purpose of computation of salary, which is required for computation of exemption of HRA. On the other side, not necessarily that this is the only answer that has been given in the key. Not necessarily. If this dearness allowance and dearness pay is taken as not farming part of salary, then also it's okay. Then the answer will be different, but you have to write clearly an assumption. Whatever the case may be, whether we assume it forming part of salary or don't assume it is forming part of salary, we have to write an assumption, that is for sure. The key given to you is not the final answer that you should write in the main exam. That is only to check your answers. Don't think that I will present like this only in the exam and all. Presentation is what we do according to what we discuss. Proper heading, calculations, and most importantly, working notes. Every provision, every calculation has to be shown in the working notes. Any assumption that is taken has to be written also in the working notes. So here, dearness allowance and dearness pay, if you have assumed that they are not forming part of salary, that is quite okay. But that does not mean they are not taxable. They are still taxable. But they will not be included as a part of definition of salary for the purpose of computation of exemption for house rent allowance. So here only it will be having an impact. In other places, it has no other impact at all. So that assumption is your choice. And another point is, one more point I would like to just draw your attention, because in all these cases, what was asked is gross taxable salary is asking. What do we say gross? When do we say gross? That means without giving standard deduction. So if some of you have in your calculations already given standard deduction, you should rectify that. Giving standard deduction is not wrong, sir. Giving a standard deduction when we are asked to calculate gross salary is wrong. If the question was compute taxable salary, then definitely we will give standard deduction of 50,000. So final answer would be that. So what is the question asking us? That is what we are supposed to give. We are not supposed to give all that what we know. We might know the entire salaries chapter, but that is not what is asked in the question. Whatever is asked in the question, that only has to be actually answered. And that is the final answer that the examiner will expect. So these are the very important questions. Almost some of them are for practice, we can say, but most of them are definitely possible to be asked in the main exam also. The smaller questions can be expected as MCQs also. That is also quite possible. So these are related to basic concepts of salary, arrears and advance of salary, and most importantly the exemptions related to allowances, section 1013A and 1014, and exemptions related to commuted pension as well as gratuity. So let us continue this exemptions in relation to the retirement benefits. In relation to the retirement benefits, what exemptions can be further claimed here? Let us continue that. We have completed only commuted pension and gratuity. Sequentially speaking, gratuity and commuted pension, one is 1010 and one is 1010A sections. And we don't have to worry about this fees, commission, etc., etc. Those are all taxable, as simple as that. What is that? We'll definitely discuss about them. So our next point here, our next discussion is going to be leave salary, or we can call it as leave encashment, leave salary. First, let us understand what it is, then we can understand what is the exemption all about. What is leave salary or leave encashment? So normally, while the employees are in service, they will be definitely taking some leaves, and there will be many types of leaves: casual leave, medical leave, a lot of types of leaves, special leaves, sometimes optional leaves. Like this, many types of leaves will be there, and we are not bothered about all those leaves. We are talking about here what is popularly called as earned leave, that is popularly called EL, earned leave. Earned leave is that which can be taken. If leave is taken, it is gone. But if this is not taken, if the earned leave is not availed, then it can be accumulated year after year during the period of service by the employee. Just for example, let us say, as per the terms of employment, a particular employee is entitled to, say, 20 days of earned leave in a particular year, each year. Each year he might be entitled to 20 days of earned leave. But every year he will not take 20 days. Some years maybe he would have taken less than that. Let us say in 1 year he has taken 15 days of leave only in that year, which means remaining 5 days of earned leave which he has not availed, main point is not availed leave is going to be accumulated. So from this year, 5 days of leave will go to his leave account. So there will be a separate leave account maintained by the employer in which 5 days will be credited because he has these 5 days of leave to his credit because he has not availed it. He has a possibility of taking 20 days, that was his facility, but he has taken only 15 days, which means 5 days of leave is not availed in a particular year. Like this he will do for many years. 1 year there may be 5 days of leave, another year there may be 10 days of leave unavailed, or maybe in 1 year no leave is unavailed, he would have availed all the 20 days. Like this we don't know, whatever the facts may be. Over a period of time, let us say this person has worked for 25-30 years in a particular organization. Over a period of time, all these unavailed leave will accumulate, and at the end of the service, all these leaves are totaled. What is the unavailed leave for this person? Just for simplicity, let us say he has 20 years of service, and every year he has a 5 days of unavailed leave, though practically it might change from year to year. But just for calculational convenience, let us take 20 years of service he had put in this organization, and every year consistently he had 5 days of unavailed leave. So naturally, how many days of leave will be in his credit at the time of retirement? 100 days. 20 into 5. What happens at that time of retirement? What happens is employer will pay this employee a salary which is equivalent to this 100 days. So that is why it is called as a earned leave, and it is paid. In other words, that is what we can call as leave encashment. So what he is doing at the end of the service or upon retirement, he is encashing his own leave. But is he encashing the leave that he availed? How can he encash that? He already used that leave. No, this is not what is encashed. What is encashed is this. The leave unavailed can be encashed after it got accumulated over a period of time. So usually this is the procedure where the employee will have accumulated a lot of leave at the time of retirement, and that can be encashed at the time of retirement. Then what we call it as leave salary or leave encashment. That is the concept of it. Now what we understand is employee has received something upon retirement. Employee would have received gratuity upon retirement, and we know how to deal with that. Employee would have received a commuted pension upon retirement. We know how to deal with that. Or even after retirement. Uncommuted pension anyway he might receive periodically, that is fully taxable. So that is all retirement benefits we are talking about. Like that, employee might receive encashment of the leave which is to the credit, which is to his credit, and that leave encashment is called as leave salary, and of course that is taxable. That is also a retirement benefit. It is taxable. It is a benefit received by employee. So basically everything is taxable. That is also taxable. But why? What are we talking about now? We are talking about exemption available to that. Exemption available to the leave salary is contained in section 1010 AA. You need to remember these sections. Once again, gratuity was 1010 only. That was gratuity. Whereas pension was 10 pension. Which pension that is? That is commuted pension. 1010A. That was. Next leave salary is 1010AA. So we have sequence here: gratuity, pension, that is commuted pension, and leave salary. So leave salary exemption is contained in section 1010AA. That's what is what we are going to discuss now. How to get exemption under 1010AA for leave salary and how to calculate that. Now, first and foremost point, just like other cases, here also for government employees, the leave salary received at the time of retirement is fully exempt from tax. So for government employees, nothing is taxable. So that's all. There is nothing for us to calculate. And if you remember, for government employees, gratuity received is also exempt. Commuted pension received is also exempt. Only taxable was what? Uncommuted pension, which is not a lump sum payment. So in general, we can say all the lump sum retirement benefits received by government employees are fully exempt from tax. So here also leave salary also fully exempt from tax. So that is why there is nothing for us to calculate there. So our calculation will be definitely focused on non-government employees. And for non-government employees, how the exemption has to be calculated, observe this very carefully. Here for this, the statutory limit is given as 3 lakhs rupees. For gratuity, the statutory limit was 20 lakhs rupees. And don't mix that with here. That is a different section. This is a different section. So here, maximum exemption as per law can be 3 lakhs rupees. That is under 1010 AA. Of course, naturally, the leave salary actually received will be there. And we are talking about which is the exemption always. Always whichever is lower. Least of the following. 3 lakhs rupees or leave salary actually received now. 10 months salary. So, in other words, we can say 10 into average salary. 10 into average salary. So, what is average salary? We already know that. But here there is a little difference. We'll observe that now. So, 10 into average salary is what 10 months salary means. But average salary is once again the basis of average salary of last 10 months only. In other words, simply what are we going to do? We are going to total the 10 months salary preceding the day of retirement. Preceding the date of retirement. If you average it, definitely you have to divide it by 10. And here in the third point, you have to multiply by 10. Ultimately, there is no difference. So average salary definitely has to be first calculated. So you don't need to worry about why are you multiplying it and dividing it. Because anyway, this average salary is required. In the fourth calculation also, on the basis of average salary of the last 10 months, we are talking. So average salary of last 10 months into 10. Nothing but total of the salary that is received during the last 10 months. That's what it is. That is the third calculation. So 10 into average salary. Then the fourth calculation is very important one. The cash equivalent of the leave. We have to calculate how much cash equivalent of the leave would have been based on what? The last 10 months average salary immediately preceding the date of retirement. This is the main point here to be noted. Distinction between average salary definition for the purpose of computation of exemption of gratuity related to those employees who are not covered by Payment of Gratuity Act. There also we had the word average salary. There what we said, it is the 10 months average salary preceding the month of retirement. Here it is preceding the date of retirement. That one difference is enough for the calculations to be completely changed. So very carefully you need to observe each of these words. Preceding the date of the retirement, 10 months average salary we have to calculate, and cash equivalent of leave has to be calculated. Whatever is to the credit of the employee's leave account, we can say at the time of retirement or death. However, there is a condition here. The earned leave entitlement cannot exceed 30 days for every completed year of actual service. For whose leave salary we are calculating, whereas every year the entitlement for the leave cannot exceed 30 days. If at all the employer, like in our earlier example, gives 25 days of leave each year or 20 days of leave, earned leave each year to the employee, which is well within the limits prescribed by law, because the law says it cannot exceed 30 days. The law never says you have to give 30 days. That is none of the business of law. The law says it cannot exceed 30 days. Then naturally question comes, sir, what if the employer-employee relationship and agreement says that a person is entitled to a leave of 40 days? Then what? No. That is not what is permissible here. We have to take only 30 days of leave for each completed year of service. 30 days only, but not 40 days. So here very carefully calculations have to be done. And what do we require here? What do we require is simple. How much leave is to the credit of the employee at the time of retirement? That is what is required. That will be definitely in the number of days. But average salary is monthly. So we can definitely convert whatever the days into months also. number of months also divided by 30, something like that. So the cash equivalent of the leave to the credit of employee has to be calculated on the basis of two things. One is leave to the credit of the employee multiplied with average salary of the employee, but these two have to be carefully calculated and they have to be synchronized for the same time period. So this is the case where many types of possible situations can be there. So let us understand some of them. So let's take an example where, let us say, the employee has retired in August. Let us say exactly on August 15th. He has retired, let us say 15th of August is the retirement date, just for example. So here, imagine the salary for this employee. Salary definition is same here, both for gratuity and leave salary and as well as HRA also, as we already know, that is basic plus DA forming part of salary plus commission as a percentage of turnover achieved by the employee. That is the same definition of salary. So imagine if the employee has retired on 15th of August and his earlier increment of salary happened, let us say, on February 1st, 2019. We are talking about this is 15th August 2019. That is the retirement date for our SSC. And earlier increment in the salary was, say, 1st of February 2019. So that was the earlier increment date. So prior to that, let us say he has received, just for example, say 10,000 per month. After that, he started receiving 12,000 per month. So increment was 2,000, which started from 1st February. Now the question is how to calculate average salary whenever there is a change. And we are not taking all the other things here. This 10,000, 12,000 includes everything. It could be basic, DA forming part of salary, or commission as a percentage of turnover achieved. If there is any change in any of those three, definitely this salary will change from 1st of February 2019. So the difference in the calculation of average salary I wanted to show for gratuity purposes and for leave salary purposes. What does gratuity say? Which gratuity we are talking? The gratuity exemption for employees, those who are not covered by payment of Gratuity Act. For them, we know that half of average salary multiplied with number of completed years of service is the exemption calculation out of the three things which are required under section 1010. But what was average salary there? That is the average salary of 10 months immediately preceding the month of retirement. And here the average salary for purpose of leave salary is average salary for the last 10 months preceding the date of retirement. So again, we have to be little approximate here. We cannot say one day also is important, but in general, let us say 15th August was his last day of retirement. Preceding the month of retirement means definitely it will be July. Preceding the month of retirement is July month. So we have to go back and see 10 months salary, July and backwards. So July, then June, backwards we are talking, and then May, then April, then March and February also, all these months. So backwards how many months are there? February, March, April, May, June, July. There are 6 months after the increment. That means in all these 6 months, this person would have received how much salary? That is 12,000 rupees per month. So that is one thing. Prior to that, naturally 4 months, because we need total of 10 months average salary. So prior to that 4 months, what are those? We don't need, but those 4 months definitely would have received 10,000 rupees. 10,000 rupees salary. So how to do this calculation here? So calculation here is very simple. So let us take 12,000 rupees multiplied with 6 months, 12,000 rupees multiplied with 6 months plus 10,000 rupees multiplied with 4 months overall divided by 10. That is the average salary calculation for this purpose. And how much is that? If we calculate 12,000 rupees into 6 months plus 10,000 rupees into 4 months, that comes to 1,12,000, whatever that is, divided by 10. So the average salary per month here will be 11,200 rupees. So that is the computation here. For the purpose of gratuity, this is the computation. For the purpose of gratuity, this is the computation. So average salary has become 11,200. And the calculation was like this: 12,000 into 6 plus 10,000 into 4 divided by 10. So how the 6 months we got? Preceding the month of retirement, 6 months backwards, he had one range of salary. Prior to that, he had a different range of salary. So that is average salary calculation for the purpose of computation of gratuity. Exemption, provided the employee is not covered by Payment of Gratuity Act. Now let us take the same example and see how the average salary calculation will change for the purpose of leave salary. Now what it says? Now it says preceding the date of retirement. 10 months preceding the date of retirement. So now the calculation will be different because his increment was on 1st February. So we have to take February, definitely, March, April, May, June, July, and half of August also, preceding the date of retirement. I don't say 14 days only, how can we take half and all? Approximately half of August. We cannot go that much day-to-day basis. But preceding the date of retirement means like that we have to calculate. So instead of here 12,000 into 6, what will be the new calculation now? This will be 12,000 into 6.5 approximately, plus prior to that his salary was 10,000, and out of total 10 months, if 6.5 is already gone, then we have to take 3.5 months prior to that divided by 10. Now the calculation is different. So do this calculation separately. 12,000 into 6.5, 10,000 into 3.5 divided by 10. That comes to 11,300. That comes to 11,300. So the calculation is different when it comes to the computation of average salary for the purpose of gratuity and computation of average salary for the purpose of leave salary. That is the essence we need to get from this. So average salary calculation, when we take for gratuity, we have to take the 10 months average salary preceding the month of retirement, whereas for leave salary we have to take 10 months average salary preceding the date of retirement. That difference we need to identify between these two average salaries. Other than that, it is okay. It is all about computation of, if there is no change, let us say in the past 10 months, we don't need to worry about this all at all. This calculation will be important when there is a change in the salary in the past 10 months some time back. If there is no change, there is no problem, no need to compute also. Directly average salary will be last drawn salary. So this calculation difference is one thing that we should identify. And another point also to be noted while computing the exemption for leave salary particularly is the concept of leave to the credit of employee. Leave to the credit of employee has to be calculated according to the data that is given in the question. For example, if the question says leave entitled, leave entitlement, or you can call it EL, entitled leave, which is popularly also called earned leave. So that is the entitlement of leave is something, leave availed is something, or availed leave we can call it, entitled leave, availed leave. Then leave to the credit or leave unavailed, let us call it unavailed leave. So entitled leave minus availed leave will get unavailed leave, that is the leave to the credit of the employee. Let us say, just for example, say a particular employee is entitled to 25 days of leave each year, that is his entitlement, 25 days of leave each year, okay, 25 days. But he availed only say 20 days of leave during each year. Like this, he has done a service of, let us say, 30 years. So what will be the unavailed leave? That is definitely 25 minus 5, that is each year 5 days. And like that, how many years it is going to be? For 30 years. So total unavailed leave at the time of his retirement is 150 days, that is unavailed leave, okay. This is what has to be converted into money form. So now unavailed leave is 150, okay, but we need the last calculation, this to be converted into monetary form. But 150 is in days. What we calculated average salary earlier, let us take this 11,300 because 11,200 was related to gratuity. That is only to show the difference between these two. So 11,300 is the average salary of the past 10 months preceding the date of retirement. So 11,300 is money, rupees. 150 is days. We need what is the money value of this 150 days. How to do that? Not a big deal. 150 days is there already. So if 150 days of unavailed leave is there already, this is 150 days. You want to convert that into months. So take on an average, say 30 days in a month, right? Multiply with the monthly average of 11,300, which means 150 divided by 30, which is 5 into 11,300, which comes to 56,500. So this is how we have to convert this whatever unavailed leave into monetary terms. We have to be very careful. All questions will not give same type of information. That is why we should understand the concept well. Our job is to calculate the cash equivalent of the leave. That is our job. Cash equivalent of the leave is what we are supposed to calculate. But the question is how? How to calculate the cash equivalent of the leave? First of all, we should know how much is the leave that is there in the credit of the employee's leave account. Then convert that into monetary terms on the basis of average salary of the employee. So once again, in the main calculation, this 3 lakhs is a standard amount. There is nothing there what we can do. That is simple. Leave salary actually received is a fact. That will be given in the question. Once you calculated average salary, the third one is also not something, because just directly you will calculate 10 into average salary. In our example, how much will that be? That will be 1,13,000 naturally, because 10 into average salary. So we just divided by 10 multiplied with 10. So 11,300 into 10 comes to 1,13,000. The third calculation is also not very difficult. Only their important point will be average salary computation, which is anywhere required for fourth also. But main calculation in the leave salary exemption computation is fourth one, where we have two things to be done. One, anyway we know already average salary, so that is already done. So what has to be done here is, particularly we need to know how much is the leave to the credit of the employee. If that is directly given in the question which suits with the Income Tax Act, no problem. Like in this case, let us say unavailed leave is 150 days. If he says, according to an entitlement of 25 days of leave per annum, then there is no problem, because the law says up to a maximum of 30 days of leave can be granted by employer to employee. There is no problem here. What if the leave granted here is not 25 days? What if it is 45 days? And this is the information that is going to be given now. It's going to be completely different. So this information is going to be new information, let us say, where the earned leave, the entitled leave for the employee is 45 days each year, and at the end of the service of the employee, it is given in the question. These are all data given in the question, let us say. Unavailed leave to the credit of the employee after serving, let us say, 20 years is, if he gives, let us say, 100 days or 200 days, let us say. That is the unavailed leave, right? That is unavailed leave to the credit of employee after the retirement. But he is entitled to 45 days of leave per year. Like that, he is entitled for each year 45 days of leave. Like that, for 20 years, he is entitled to. So now the question is, do we don't know how much is the availed leave, and we have unavailed leave of 200. So can we do like this directly? 200 divided by 30 into 11,300, like that can we do? That is where we have to be careful. No, we cannot do like that. Why? Because the law says the employer can grant a maximum of 30 days of leave only. In this case, it has exceeded. Earlier it was okay because the employer was granting only 25 days of leave, and 20 days was availed, and 150 days of leave was unavailed. That was earlier. Now, employer is granting 45 days of leave each year. How much availed we don't know, but unavailed leave is 200 days at the end of the retirement or at the end of service, which is upon retirement, it is known. But first thing first, what we should calculate here is, sir, availed leave we don't know. We don't know, but we can calculate definitely, yes. How? First we can calculate how much is he totally entitled for throughout the service. 45 days each year, like that 20 years. 20 years he has worked. So total service, how much leave he was entitled for, that was 900 days. When he is entitled for 900 days, unavailed leave is 200. Naturally, how much will be availed? 900 minus 200, that comes to 700. So now we have the availed leave already, and this all calculation is useless. Then we have to do another calculation. What is that? As per Income Tax Act, how many number of days of leave he can have maximum? He can have only 30 days of leave for each completed year of service. That means 600 only. And he has availed 700 already. Will there be any credit as per Income Tax Act? No. You cannot have negative leaves. That is not possible. So how much exemption he can get in this case? 0. No exemption he can get, because the last calculation answer is 0. There is no leave to his credit. When there is no leave to his credit, not according to employer-employee contract, according to Income Tax Act, there is no leave to his credit, because he is entitled for only 600 days, but he has already availed for 700 days. Now just imagine, for the sake of calculation, say he has 400 days of unavailed leave, let us say. Then automatically availed leave would have been 500. Then how much will be, as per Income Tax Act, unavailed leave or leave to his credit? 100. So the point is, as per the employer-employee relationship and contract, the leave to his credit is 400. As per Income Tax Act calculation, the leave to the credit is 100. So we will not take 400. We will take 100 as our basis. Then can we do this, our same calculation, 100 divided by 100 is number of days, that is. We have to convert that into months approximately by dividing it with 30. Multiply with average salary, whatever we already calculated. In our case, let us say 11,300. Can we do like this? Yes, that is not a problem. But we cannot do like 400 by 30. This is not allowed. Why? Employer is giving him more than 30 days of leave. That is not correct. You should not be giving more than 30 days of leave. If he gives us their headache, we are not bothered. We are bothered about exemption calculation. So another very important point in the third calculation is this, where the employer gives more than 30 days of leave to the employee each year, then we have to be double careful. We have to do a calculation, redo actually the calculation, calculating the real number of days of leave to the credit of employee according to Income Tax Act, which takes 30 days of leave entitlement for each completed year of service. Once again, for every completed year of service. Here also, part of the year should be ignored. That point also to be noted here. So cash equivalent of the leave means that. Simply what? Let us put it this way. Leave to the credit of employee, leave to the credit of employee, or let us use the same word what we have used, unavailed leave, let us say, multiplied with average salary. But unavailed leave, if it is in days, you convert that into months by dividing it with 30. If unavailed leave itself is given in months, then don't convert it. Formula is there, I will blindly do it, not like that. Be careful with the numbers. What is given? Days given, months given, how is it given? You have to observe. Average salary is monthly, that we know. Because of which, definitely the unavailed leave also has to be in months. If it was calculated in days, it has to be divided by 30. If not, it can be just called as unavailed leave multiplied with average salary. So simply we are converting the unavailed leave into monetary terms by taking the average salary as a basis. And we know what is already average salary. That is the average salary for the last 10 months preceding the date of retirement. That is a very important calculation of exemption under section 1010AA for leave salary received upon retirement of the employee. Now, certain points to be noted here. First and foremost, if the leave salary is received during the service, while the employee is in service, if leave salary is received, that is fully taxable. So there is no exemption. So this leave salary, whatever exemption we are talking about, is only after retirement. That is common. Even gratuity received during service is also same. So same logic applies to leave salary also. During service, nothing is exempt. After retirement only, this is exempt. Then the other things are also same. We know this already, the logic of statutory limit. 3 lakh statutory limit is what? Is it like every time the employee retires from an employer? No. That is his lifetime exemption. Imagine if the leave salary is received from 2 or more employees in the same year, total exemption cannot exceed 3 lakhs. Or same way, if the leave salary is received earlier from any former employer also, then the statutory limit while calculating this will be, instead of 3 lakhs, it will be 3 lakhs minus already claimed exemption. So the statutory limit itself will get reduced by the amount of leave salary that was claimed as exemption earlier, already which was exempt earlier, that has to be reduced from the limit of 3 lakhs. Once again, both these points will tell the same thing. This 3 lakhs rupees is the maximum exemption that any person can get for leave salary in his entire lifetime. What is the meaning of salary? Same thing, nothing new here. That is basic plus DA, forming part of salary plus commission as a percentage of turnover achieved by the employee. Same thing. Then what is average salary? This is also already what we discussed. That is a salary which has been drawn during a period of 10 months immediately preceding the date of his retirement. Retirement could be superannuation or otherwise. That doesn't matter. We don't care about it. So that is a leave salary exemption. So simply the summary of all the leave salary exemption can be seen in this table or a flowchart type diagram. If leave salary is received, leave encashment is received during the period of service, simply that becomes fully taxable. There is nothing there to be calculated, fully taxable. If it is received on retirement, then we have to check whether it is received by a government employee. If received by a government employee, naturally it is fully exempt. There is nothing for us to calculate. But if it is received by any other employee other than government employee, then we have to do these calculations. What is the first one? 3 lakhs rupees. Second one, leave salary actually received. Third one, 10 into average salary. Fourth one, unavailed leave into average salary, which means the cash equivalent of unavailed leave based on average salary to the credit at the time of retirement. But condition is what while calculating the fourth one? The earned leave entitlement cannot exceed 30 days for every year of actual service. Once again, here also sometimes it will be given the service was 23 years and 8 months, something like that. So should we consider 8 months? No. It should be only taken full year of service. So fraction of the year should be ignored. That should be ignored. That is about leave salary exemption. Now let us apply this to this illustration number 5. Mr. Gupta retired on 1/12/2019 after 20 years and 10 months of service. 20 years and 10 months. So what we should consider? Only 20 years. This 10 months should be ignored. That should not be considered at all. And he received a leave salary of how much? 5 lakhs rupees he has received. Okay, fine. That is what his entitlement or whatever the encashment of leave happened on the date of retirement of 1st December 2019. But now look at this other details of basic salary. So basic salary was 5,000 rupees per month and 1,000 rupees was increased with effect from 1/4/2019. With effect from 1/4/2019. So here, fortunately, there is no difference between preceding the date of retirement and month of retirement. So up to what date we have to take? Up to November 2019 we have to take. So already we should calculate. When 1,000 rupees was increased from 1st April 2019, April, May, June, July, August, September, October, November. In other words, 8 months he would have received certain amount of salary. 2 months he would have received some other amount of salary. That's what we have to first of all identify. And how much amount he would have been entitled to for the period of 8 months. Here one more point comes. He has given 5,000 per month basic salary. 1,000 was increased with effect from 1/4/2019. Always a question remains, is this 5,000 inclusive of 1,000? Or is this before increment and after that it becomes 6,000? So that is interpretation issue. The word says 1,000 was increased. Normally basic salary is 5,000 per month, out of which 1,000 was increased with effect from 1/4/2019. If you read it like that, then we can say for a period of 8 months he would have received 5,000 rupees as basic salary, and for a period of 2 months earlier he would have received 4,000 rupees as basic salary. Let us just call it as 5K. This is 4K. So 8 months into 5,000, 2 months into 4,000 is what we are interpreting from this information of basic salary. Dearness allowance, there is no change. It has been 3,000 per month, but how much is forming part of salary? Definitely only 60% is forming part of salary. So that is one thing. Commission is given as 500 per month. Once again, we can assume that it is already calculated as a percentage of turnover. If not, we can ignore that. Bonus, we can ignore that anyway. Leave availed during the service for 80 days is an important information. And he entitled to a leave of 30 days only. So there is no problem here. He is not having any violation of the restriction in the Income Tax Act. So each year 30 days is perfectly fine. There is no problem. You are required to compute his taxable leave salary, assuming he is a government employee. What is there to calculate? If he is a government employee, nothing is taxable. That means fully exempt. How much is the taxable leave salary in that case? Nil. So there is nothing to calculate there. So calculation and all will be there only for non-government employee. For non-government employee, the calculations are there. And what are those calculations? We know we have to first of all write the provision very clearly. what are all the calculations required. First of all, 3 lakhs. That is a statutory amount. There is nothing that we can do about it. Second one is actual leave salary received. In this case, it will be how much? That is 5 lakhs. That is this actual leave salary received in this case. Then the third one is 10 into average salary. So main point comes, we need to calculate average salary first. We can take any assumptions here. If we consider this commission also as part of salary, then the calculation can be like this: 8 into 5,000 plus 2 into 4,000, that is basic, plus 1800 into 10 plus 500 into 10. These are all part of salary, whole divided by 10. So how this can be? Let us take one by one. So if at all we have this 8 months at the rate of 5,000 rupees plus we have 2 months at the rate of 4,000 rupees. This gives us basic. So 8 into 5,000 plus 2 into 4,000. That will be how much? 48,000. 48,000 is basic for the last 10 months period. That is basic only. But we have DA. DA what is given? That is given as farming part of salary only 60%. So out of 6,000 per month, only 1,800 per month will be farming part of salary. So when you say 1,800 into 10 directly, 1,800 into 10, that comes to 18,000, that is DA. Now, commission is again an assumption. If we assume it is already a calculated commission as a percentage of turnover, that can be taken. Because it is not given it is commission on turnover, we can ignore it also. Let us ignore it. Let us not take commission, because at least it should have been given commission on turnover. That is also not given. Too much of assumption it would become. If we assume it is commission on turnover first, and that too if we assume that it is a percentage of turnover already calculated, then 500 per month it has come. So let us not consider commission in this case. So let us only take basic and DA. Bonus anyway will not be part of salary purpose here. So what is total here? 48,000 plus 18,000. That comes to 66,000. So 48,000 plus 80,000, that is 66,000 for the 10 months period divided by 10. So what is the average salary? 6,600 is the average salary. But for the third calculation here, automatically 10 into average salary means average salary comes to 6,600 rupees. 6,600 rupees into 10, that itself is 66,000. That is third calculation. 66,000 is the third calculation's answer finally. Then the fourth calculation is what? Number of days of leave to his credit has to be converted into monetary terms. For that purpose, first we should know how many number of days he has entitled for, and then we should know how many number of days he has availed. So how many years he has served? First of all, 20 years he has served. Each year 30 days of leave he is entitled to. 30 into 20, that comes to 600 days of leave. How much leave he has availed already? That is given in the question. 480 days he has availed already, which means 120 days of leave is to the credit of employee. Convert that into months. That comes to 4 months, right? 120 divided by 30, that comes to 4 months. 4 into average salary, that comes to, once again, 4 into 6,600. Which is lower out of this? Naturally, this will be lower out of this. That is the exemption. 4 into 6,600, that comes to 26,400 rupees is the only exemption that is available under 1010 AA. 26,400 rupees. Taking this as a basis. That is the exemption that is calculated here also. 26,400 rupees. Exemption, that is. But received is 5 lakhs. So naturally taxable leave salary will be how much? 4,73,600 rupees. That's it. That is the calculation of exemption for leave salary under section 1010AA. If it is received by government employee, anyway, there is nothing taxable, fully it is exempt. If it is received by a non-government employee, actual leave salary received are 3 lakhs rupees or 10 into average salary and cash equivalent of the leave to the credit of employee at the time of retirement. Whichever is lower will be exempt. And what is important thing here to be noted, how to calculate average salary. How to calculate average salary? For the 10 months preceding the date of retirement, we have to take average salary. This only calculation will be required if there is any change in the salary during the past 10 months. Because there is a change here in the basic, with this calculation will be required. So average salary calculation is very important. This is first calculation, that is average salary calculation. And second calculation which is important for computation of exemption under 1010A is the leave to the credit of the employee, or we can call that as unavailed leave. But unavailed leave cannot be calculated just as per employer-employee contract. We have to check whether that is in line with the Income Tax Act restriction of entitlement of leave cannot exceed 30 days per year. So if it exceeds 30 days per year, then we have to restrict it to 30 days per year. In this particular example, it was not exceeding 30 days, it was exactly 30 days, so there is no problem. So 120 days was the leave unavailed. Convert into months and multiply with average salary. You will get fourth calculation. Whichever is lower is exempt, that is 26,400. So naturally in this case, the taxable leave salary is 4,73,600. This is another important retirement benefit, that is section 1010AA related to leave salary. And with this, important retirement benefits, the most important retirement benefits, almost we can say they are concluded. 1010 gratuity, 1010A commuted pension, 1010AA leave salary. Leave salary is the place sometimes people unnecessarily mess things up with unnecessary confusion, unnecessary complication. There is nothing like that. Simply, we need to calculate average salary based on the 10 months salary preceding the date of retirement. That is first calculation we require. Then we need to know how many number of days of leave are supposed to be in the credit of the employee, giving a maximum of 30 days of leave every year. But for that purpose, we should check the question whether the employer is giving more than 30 days a year or not. If yes, we should restrict it to 30 days and recalculate the leave to the credit of the employee accordingly. If it is not violating, there is nothing for us to calculate. Directly, whatever the data given will lead us to how much leave is to the credit of employee at the time of retirement. But that leave has to be converted into monetary terms, again using the average salary as basis. Because we have taken average salary as months, the leave what we are talking about, which is unavailed, also has to be converted into months. Then we get the fourth calculation, whichever is lower will be given as exemption under section 1010AA. Very important. All these three are the core retirement benefits, we can say. Of course, after this there is 1010B and 1010C. Those are also okay for MCQs. Certainly they can be asked as a part of big question also. But core retirement benefits, the major retirement benefits are these three: gratuity, commuted pension, and leave salary. Practice these things very well. Once again, if any questions are there or doubts are there, if you are facing any difficulty while performing these calculations, please let me know. I will try to explain it once again, if at all that is required. If you are comfortable, definitely that is better. Well done. And practice more and more questions as and when they will be given to you. And that is the only way. By reading the provision again and again, preferably writing it on paper again and again, remembering it, then understanding it, definitely interpreting it, applying it while solving the problems many number of times. That is called what we call practice. And when we do all these things together, it will be a big exercise when we do it first. But once we are experts of this, it will be very simple. And revision for each of these topics in future, you will be surprised. Will be done in a very quick time. Now, how much time we are taking to understand this leave salary calculation and all. When you revise it, you need only half minute maybe. That's all. So that will be the conversion rate, learning level and revision level. So that's why more focus we give now, it will be much easier later to revise them quickly, and we'll be comfortably solving the problems without any problem, without any struggle. But if we complicate the things now, if we postpone the things now, if we don't do them now, naturally it will all come to us later, and then more and more complications will be coming on us. So let us not go into such situation. Read, write, and practice the questions well as and when they are given to you. Fine. With that, we can conclude today's session, and almost we can conclude retirement benefit segment also. Though there are two more points in that. The one is 1010B and other one is 1010C. Those can be discussed quickly. But majorly the retirement benefits are done, and we'll have to now majorly focus on perquisites as a third segment. We will do that after completing 1010B and 1010C only, and after discussing some of the provisions related to provident fund also. But as I said, those are small topics. Major topic is allowances, which we have completed. Retirement benefits, top 3, which we have completed. And majorly what is the topic remaining in this chapter is perquisite. Perquisites is definitely there. But prior to that, we'll complete the other small things also. Then we'll move on to perquisites. Till that time, take care. Thank you very much. Bye-bye.